What's up, ladies and gents? Welcome to episode number sweet 16 of the TD Markets podcast.
16.
Yeah, child number 2 that's never been kissed. Because of season 2, you know?
Hey, these metaphors, eh? You on fire.
It just comes, eh? It just comes.
It happens.
Yeah, welcome, guys. You're joined by myself, Zander, and my esteemed colleague, Seppo.
Yeah, happy to be back as always.
Yeah, it's good to be back. Nice seeing all of your faces from a virtual platform.
Let's get down to it. We're happy to be back. We had to start the session a bit later. It's 2 now. Normally we have it at 3, but you had to start
Earlier.
at 2. Yeah. No, earlier. Normally we have it at 3.
Yeah.
We started earlier at 2.
Yeah.
Yeah, but yeah, I hope you guys are good wherever you are. Let's get down to the TD Markets podcast episode 16. Let's see what has been happening. All things markets this weekend, you know, things did happen.
One point away
to the
Champions League.
UCL. So right now we at that Europa spot now.
Yeah, well, no, we're in Champions League at the moment. Still top 4.
Still top 4.
But 1 point away from guaranteed.
We need to get that, man. Get that, man. So let's jump straight into it. We'll talk a little bit of soccer later on. Let's just switch to the calendar, right? And see what we have this week. It's a brand new week, a Monday. It's something on Wednesday. Something important is going to happen on Wednesday. But before we get to it, anything that caught your eye? Maybe no. Today we don't have anything.
There's not much. Like, I had a look at the calendar. Like, it's a fairly quiet sort of a day today. But yeah, I think like for us in particular, like everything's starting to line up for Wednesday. Like obviously, like next week is going to be like a major week.
It's the big one next week.
Yeah, next week's going to be a major week. Wednesday is going to be fairly exciting to say the least.
This coming Wednesday.
Yeah.
Okay. Yeah.
Yeah, because we've got this week we've got ZAR interest rates due, I think on Wednesday. Expected 50% base or 50 basis points hikes, so 0.5% increase in interest rates. So it's going to be like, we'll have a look at the charts a bit later on.
Yeah.
But we can see some really big like movements happening in the market. We also saw the NZD interest rates in the morning as well on Wednesday.
Yeah.
There's some NZD interest rates coming in.
They're forecasting a 25 basis point.
25.
25.
Yeah, so I think we're still going to be in the cycle of like interest rate hikes globally. Still want to see someone pause somewhere or another. I think Australia did pause.
Yeah, Australia paused, and I think the Fed might follow suit, but we'll see.
Yeah, we'll see. Like, let's hope. I'm definitely leaning towards like a hoping more than anything. I see the market reactions when they do pause, so let's keep fingers crossed for that. But we also have like South African interest rates also due.
Yeah, that's on Wednesday, right?
Yeah.
All right, let's go. So this is true. No, this
So
is
that was
Wednesday.
Did I get my figures wrong?
All right, I don't see any. Maybe it's Thursday even.
Just keep on scrolling.
Yeah, we'll get to Thursday.
Like Godspeed King, but also like on Wednesday we have like FOMC meeting minutes. Interesting to see what they actually do decide and what the minutes kind of gets released at. It's very important to actually see like what they come out to with regards to what's happening in the next couple of months, because they do discuss it most of the times, and will give you a bit of a leeway and indication on what's actually going to happen. Like, for instance, when they actually decided to start increasing interest rates, there was just a mention in there in the meeting minutes, and we saw that volatile market movement come to the downside.
Yeah. Look, it's always important to keep to read these meeting minutes. You know, they can access them on the Fed's website. That's where I get those meeting minutes to have an understanding or an idea of what could happen next week, which is the interest rates next week. You know, so this is where the focus is as well, right? Getting those Fed meeting minutes. The ZAR, let's take a look at the ZAR. The rand is just plummeting, man. The rand is just too weak. And I
Oh,
think
there we go.
Thursday,
Thursday.
yeah.
Got my date wrong.
So you say 50 basis point hike.
Yeah.
That will take this to 8.25%.
Yeah. Meaning the prime lending rate's gonna be like almost 12%.
Yeah, just a little below 12%.
Yeah, so it's going to be like I'm still like we saw this on the previous SA interest rate hike. We saw like really good ZAR strength coming into the market. So I think we'll have a look at the charts a bit later on, but I think it is shaping up for that bit of a retracement after following this 1950 push that we got.
Yeah, that's bad. That's bad for the economy, man. But do you think we are gonna have a look at the charts? But you mentioning a retracement coming, possible retracement coming.
1870.
Take a look at the charts. So the ZAR interest rates that at 3
o'clock, yeah.
3 on Thursday, 3 o'clock on Thursday. Just keep a close eye on that. And then this is Friday. Friday, I saw the PCE. There we go. PCE price index. We'll be watching out on that. And then anything. Let's see if there's anything else. Core durable goods also there. Not my focus. I think we have something earlier on retail sales. The pound retail sales. Not much of a focus.
Well, it'll be interesting to still see what the pound retail sales come in with regards to the inflationary numbers. They're expecting like a bit of a better figures, like keeping it stable at 0%, but comparing like what it was like last month at like almost minus 1%, would be a good improvement to actually see.
That's at 8.
Yeah.
And I think that's it for the week. I mean, the ZAR interest rates on Thursday, FOMC meeting minutes on Wednesday.
New Zealand interest rates
on Wednesday as well.
Couple of interesting ones.
Then of course we are preparing for the next week, right? In fact, let us check the calendar. I know we're gonna have another episode next week, but let's just look at the calendar for the upcoming week or for the next week. It's gonna be loads of them. All right. Okay, so that's Monday.
Bunch of banking holidays.
So
Monday's gonna be fairly quiet.
Then Tuesday, the Swiss GDP at 9. We also have. Okay. Will be interesting to see the consumer confidence there.
Expecting an increase.
And then Wednesday, that's when things start. All right. Do we have interest rates next week?
No, we've got I think NFP next week.
No interest rates?
No. I think we're still like a couple of weeks out of interest rates again.
All right. So yeah, so we'll have a look at the calendar next week. But for the week of NFP, we know we're gonna have jobs, gonna have ADP, we're gonna have I think some PMIs. And
that JOLTS figure is going to be very interesting to see.
JOLTS figure.
Like it's been something we've been sort of monitoring, and they're expecting it to go down even more.
Yeah, even more down.
It's got a big like impact, and it's significant. Historically it's not really been something that we've been paying a lot of attention to. Yeah. But like ever like the last couple of months, it's declining from almost 11 million down to like forecast now is about 9.3 million. Yeah. It's like a big sort of a chunk out of the job market.
Yeah, I mean, this has to do, and I raised this question on one of the NFP streams that maybe this has to do with where we are right now in the year. All right, this is the 4th month going to the 5th month, right? No, this is the 5th month going to the 6th month, right? So that shift from the first quarter to the second quarter might have an impact.
To some extent, like I would agree with you, but traditionally also like the second quarter is when you want to look at pushing from a job perspective. Like a lot of employers want to see normally the way that first quarter does during the course of the year to start hiring for the second quarter. But for me, like the thing is, I think there's so much financial constraints given like interest rates at the moment. I don't think there's a lot of businesses actually looking to hire at the moment, and those that are might be like very specialized jobs as well, which makes it harder. So like coming back to like the jobs figures as well, like that average hourly earnings, given that there's a limited amount of resources out there for specialized jobs, like you should see that increase over the next period as well. Just because jobs are so much more in demand, but I think there is a lot of companies scaling back in like how they are looking for employees at the moment. So yeah, definitely interesting, and I do think we'll get that numbers dropping down more as well.
That average hourly earning number, I just want to go to it quickly. There we go. So I think it was an increase the last time.
Yeah.
Right? Yeah, to
Yeah.
0.5%.
It was exactly like we spoke about it, and I think it was sitting at about 0.4, 0.3, and it came
somewhere
out
there,
at 0.5. So it did push up really well last month, and that was what I was looking for. It is sort of a factor as well, because you'll still see that inflationary numbers still be affected with people making more money.
Yeah, this labor market is quite strong in the US right now.
Like if you look at the employment data, it does seem very strong. Like they still are hiring a lot of people.
Yeah.
It's still, the Fed will still keep on mentioning that they still see it as a soft labor market, but I think the amount of job opportunities out there is decreasing rapidly, and that's where they would refer to more of like a soft labor market, because there's still the unemployment figure keeps on staying at that 3.4%. We still see that NFP number being quite stable. And that average hourly earnings still staying above that 0.3 level. So it's still very, very good to see. And I won't necessarily classify it as like a weak labor market, because they are still hiring people, and that unemployment figure keeps on staying stable.
Yeah, so I mean, we'll see with the next FOMC on the press conference if they're gonna touch on the labor market. If there's some journalists will talk about it, ask questions on it. But NFP has been beating expectation week in, week out. This whole year, there has never been below forecast.
Yeah,
there's always been above, and also for the good part of last year, always been above.
I think it also like helps that the forecast has been very low.
Yeah, it has been low. It has been. I mean, last month it was about 180.
Yeah.
Yeah. So yeah, it has been low, but it's just been beating expectations. Maybe that might be a strategy or tactic, for them to intentionally forecast a lower number, whereas they know that it is strong. The chances are it's gonna beat it.
Very possible. Like that participation rate is kind of interesting to me. Like 62.5%. If for those that don't know what that means, means that 62% of the working force is actually working. So that's very interesting for me. Like I would think that was actually like a lot higher than it is. But it might be that a lot of people are still self-employed. For like a big part of it, or social media driven. And I think it comes back to one of the comments like we heard the other day when someone asked like, does that unemployment figure, like all of the social media jobs, sort of add into it? But like I would expect that number to be so much higher than it actually is.
So we have unemployment rate, participation rate. You just broke it down what participation is. Unemployment rate is obviously unemployed workforce that are actively seeking employment. Right? So with the participation rate, there's about 62.5% of the workforce that's working. And unemployment rate suggests that 3.4% of actively seeking employment, unemployed people.
So there might be like a big chunk of those people actually not classified as unemployed anymore.
All right. So this is how the week is. This is how the next week looks. So this week, major focus, interest rates, FOMC. Next week, it's a labor week, so to say, labor market week.
Yeah, I can't wait for that again.
It's gonna be a good one. Our NFP live stream should be a good one. Go to the charts. Let's see what the charts have been. You mentioning USD ZAR. Mentioning USD ZAR. Where USD ZAR is trading at the moment, those all-time highs, man. Let's just open the charts first. There we go. I was also looking at Euro ZAR. Euro ZAR all-time highs, USD ZAR all-time highs. It's kind of like stopped around that 1950.
1950.
You're saying you're anticipating a bit of a pullback?
Yeah, I'm anticipating it coming down to like that 1870 mark. That's ideally where I sort of want it, and there's a couple of things on that. You'll see, like if you draw some fib retracements and extensions on it, it correlates really well. Um, correlates really well with those levels. Even if you take that last swing to the upside, if you take that last swing to the upside and you do a fib extension down lower, you'll still see that retracement coming in quite well as well. So everything is correlating really well for me around that 1870 mark. I'm not really someone that likes trading reversals, but that is a trade that I do see sort of panning out.
So, so the DXY, let me just open the DXY because for the past week the dollar is just gaining strength. Where is the DXY?
The ZAR is something exceptional, to be frank.
Yeah.
A lot of the times as well on the ZAR, especially when you see interest rates coming out, and that's why I'm leaning towards like Thursday-ish with the interest rate decision. I think we're gonna head closer to those levels. As we see a lot of strength coming into the ZAR because of that high interest rates that we're seeing, especially in comparison to a lot of the other countries.
Yeah.
The rand is still like a very high yielding currency, so I think that interest rate decision is going to push it down lower. I think we saw like a really nice like rejection happening now at the moment on the 4-hour chart.
Yeah.
I think if we do break that level just below that last low, I think we're gonna head down to at least there.
This looks like a pretty good structure for the market to reverse from. Rejecting that high, forming a triple top around this high, coming back, rejecting. Yeah, it looks like a pretty good short. To me, it might look like a short-term sell opportunity, right? I wouldn't look to long-term short it.
No,
Yeah.
I would definitely take it down to 1870, and that's where I'll look at longing it again. Like everyone knows, my point of view on the rand is I'll still take it up to 22.
We all know 22.
I'll still take it up to 22, and that's where like I'll look at. I don't know. I'll see what happens from there. But there's a lot of outlooks on it that I don't necessarily see positive.
Are we still in junk status?
Yeah. Still graylisted, junk status.
So that 22
blackout status.
You know what? That 22 is going to take us to another.
Listen, if we get a national grid shutdown for a week, which is likely and possible.
You know, we're anticipating it.
We're seeing it fly, and I think 22 might be like very ambitious, or not ambitious. What's the opposite of ambitious? Unambitious. I would still say like the likelihood of it like going further than 22 would be significant.
Yeah, I mean, I think I'm gonna get a little backlash on what I'm about to say, but it's a good time to be alive to see the weakness of the ZAR right now. You know, I'm living. We're in South Africa, but to say something like this, but from a trader's point of view, man, it's this is something that's never been seen before.
There's like always opportunities in the markets, like, and where you actually look for those opportunities. We've been through the COVID times when we saw like that really good opportunities to short oil into oblivion. The really good opportunities to long gold. There was so much opportunities, and through all of these cycles, and even like with the war, if you can establish something when there's major news events happening, you know what can happen, and those are trends you can ride for a while.
For a while we saw, as you say, in oil, gold,
natural gas. Like we called natural gas at like, okay, well, I'm gonna say $4, but like it's sitting at $2 something now. Given that, like it actually still rallied up to like 9 something.
Yeah, close to 9 or 9 something. Yeah.
Like there's certain things, like if you dissect the economics of these events, like there's so much opportunities in the market.
All right, so let's see. It looks like there might be a good shot leading to the interest rates. You're anticipating that 18 on the Feb there. This could be another target, right?
Short term I'd look at that. Short term I'll definitely look at that target, but I'll keep an eye on that, like what happens in and around that area, because I think that's about 19, right?
That's about 18, yeah, 19. 19
Yeah,
is
it's
the
about
top
19. If we break through that, I'll definitely look at about
Yeah,
18,
that
17.
1870 mark. I want to go to gold. I want to go to gold. And with gold, we're seeing it pushing down from that COVID level, their pre-pandemic levels. It has been pushing down. Silver also has been pushing down. Yep, this and I think it's gonna continue pushing down. Gold is gonna continue pushing down.
Yeah, like I think I said in the previous podcast,
Yeah,
I'm expecting it to come down to about 1914-ish.
1914.
14, 1914.
Oh yeah.
I'm expecting it in around that area. There's a couple of reasons why I'm looking at that, especially if you're looking from a FIP point of view. Like I know Ashley was very ambitious with his 2,400, but but I'm not doubting that we might still be going there. For me, we need to get over that 2017 mark before like considering it. But I do still think like if we can get down to that level, there'll be a nice retracement we actually see coming into the markets. And it possibly even if we go to 1870-ish.
Yeah, I mean we are not saying it cannot go up, but you know, as per structure, it created a higher high from the previous one.
From a timing perspective, like
Yeah.
like
Yeah,
everything from in trading is from a timing perspective. Considering like how much we rallied, like I
Yeah.
knew that that 2070 mark's going to be significant. So we sort of need that bigger retracement. And if you look from that perspective, I think that 1914 odd level is lining up quite well.
This will be the third touch of the trend line as well. You know, third touches tend to be the stronger ones. I'm looking at the weekly also. The level you pointed out, there's been structure before. Structure before. So leading to that, there could be a short-term opportunity to that level, right? But as you said, this is counter trading. So you know, 50-50 chance, because it can still go up to the 50 and reverse. 50-50 chance. But for a continuation, I think that level on the 61.8, that is a good area to, if we want to look for long, to keep longing gold. You know, short term, I think I might look for selling opportunity, just short term selling opportunities. You know, the structure is now descending, it's creating lower lows and lower highs, breaking below significant levels. We could be set for a continuation anywhere around this zone as well.
Yeah, like there's still a lot of possibilities lining up.
Yeah.
When I naturally like look at charts, like I normally want to see like a better price to get in for something. Like I've just been feeling like gold is too overextended. Like I haven't gotten my price just yet. I need it lower still. That 1914, even 1900, maybe like 1870. Like I think 1817 was half my ideal level if I can remember. But there's still like I'm also very skeptical to like long from here at the moment just because of how high the market has rallied and that triple top it's formed.
Yeah. I mean, this wouldn't be a good areas to buy. Look, there's a lot of profit taking here, whatever the reasons are. So naturally, you would want to wait for a better price.
But it's like I said sort of before, like there needs to be a reason for gold to rally to 2000 2400. We might not know that reason just yet, and it might still be like housing prices still lining it up or like a debt ceiling being hit, but there needs to be some sort of a reason. But we need some sort of a better price, and you'll normally see like once we get to that lower price, there's normally like a couple of days to a week or so before you actually find out, and that buying comes into the market where you'll actually find out. But I still think there might very well still be more upside in it. I just need better pricing.
Yeah, makes sense. It does make sense. If you're keeping an eye on listening to the debt ceiling story, as I saw Joe Biden, president, was in Japan last week, and he had to cut the trip short somehow.
There was talks of them actually raising their debt ceiling for more funding. I haven't been keeping so much on track with it, but it does seem like they want to actually increase increase the debt ceiling a bit so they can do more financing. But they're still sitting with like, there is a bunch more reasons why we can see like weaker sort of a dollar coming to the markets, and taking into like the BRICS currencies and all the developing countries trying to delist, or not delist, listen to me, trying to not use the dollar as the denominating currency anymore for transacting. That is one of the things, but
that's big news.
yeah, it's going to decrease the demand for the dollar. But there's a couple of reasons we could see actually being the reason for more dollar weakness more than strength, because everyone knows like the dollar is the reserve currency of the world, and
Yeah.
it's important to just understand that impact of it not being, or for a majority of countries or developing countries that actually use it not being, it's going to be very interesting to see how it pans out. And it kind of reminds me sort of the Eurozone setup playing out, where when the euro was sort of implemented, we saw like havoc also reaching in the markets.
Now, yeah, look, we are gonna get those days where it's just gonna be havoc in the market. Yeah, it's just gonna be crazy in the market. So that's US. I was also keeping an eye on silver. Silver has just been crashing also to the downside.
Yeah, the nice thing about silver is like once gold sort of picks a direction and silver moves so much faster.
Silver follows, yeah.
Yeah, and it's more aggressive. Like I like looking at silver and like trading silver because the movements in silver is so much more aggressive.
Yeah.
But to be fair, like if you look at that silver chart, it's almost on a longer.
Just put your order there. Just be patient with it. You know, it can still reach a little bit to the downside. Just like here, people that had orders, they were a little bit patient with it until it moves to the upside. I fully agree with when you say when it moves, it does move. It gives us those aggressive movements, either to the upside. Moves such as these, man. These are movements you'd wanna catch.
Yeah.
You know, they don't come every day, but patience does help sometimes.
Yeah, it consolidates a lot more, but its movements up or down is a lot more aggressive than gold's.
A lot more aggressive. These are movements, you know, you catch this move, it's just gonna move, eh? Just gonna go straight to your TP.
Oh, or even further.
yeah, just gonna smash it and just go beyond it. Yeah, no, silver is nice to trade. I've had a couple of positions. It's been a while now since I've traded silver. Hasn't been interesting so far to me, but we'll check it out for this continuation that's coming here. Definitely for the continuation.
Was it other silver time when you were on? Let's check now. Oh yeah.
Yeah, look at that.
That's what I was kind of looking at when I told you, like, I think I want a longer.
Look at that.
Is the mouse. To this. Yeah, that's a really nice touch.
Just look at that.
But also goes against my gold predictions.
You know, like it doesn't mean that they move at the same time. You know, this can start pushing up. Gold can just find its feet before it goes up. Yeah, that fib. I was about to mention that fib. Yeah.
Yeah, nice 50 touch. Or close to that 50 touch.
Yeah, there is a strong level, that correlation right there.
It's just this aggressive push to the downside that makes me a bit more cautious.
Now, gold also, let me go to gold. You see this aggressive push down. Gold also made something like that here. Remember how aggressive this move was? And it was a retracement, you know. So things like these do happen in the market. That's where now it kind of tricks a beginner trader to thinking that it's a reversal. Then short, only to find that the big boys are waiting for the price.
Yeah.
To start longing it. Yeah, but look, gold, silver, you know, to me, silver is the one I would watch than gold, because gold is rejecting those highs. Might be a little bit tricky.
Yeah, silver hasn't reached those highs.
Yeah, 100% hasn't reached those highs. Yeah, I think silver is the one I would go with. Yeah. I've been keeping an eye on the dollar overall. Like I've just lost interest in the dollar. What's you know, I've been focusing on cross pairs.
Not so much. Like
Yeah.
we had a chat the other morning, and I spoke about natural gas a bit. Natural gas, I think it was on Friday actually. Like on Friday, I was looking at natural gas. I was looking for that nice close on natural gas. Um, the sad thing is like we didn't get that close above that level I was actually looking at. It closed on top of it.
Let me get this level here.
Yeah. So it closed like on top of that level. So like I was thinking we'll get like a bit of a retracement back down lower. Uh,
Don't you
but I
think,
still went too long, to be honest with you.
yeah, don't you think even though it's rejected that this is a retracement?
Yeah, for you were just on that level to about there. I do agree with you, and like that's sort of where I'm leaning towards. Getting that retracement back to that level. I do feel like I think I told you like when we chatted as well, like I was looking at that might possibly be that it's a bit overextended, like off of that last push up.
Yeah.
Feels a bit overextended. We need that retracement a bit down low and then try and take it up higher.
Because what I'm looking at here is this coming back to the fib. So the fib, anything deeper than that, I wouldn't really expect it.
And maybe start lowering it from $2 again.
Yeah, there's like $2.50 around the same $2.50, $2.45, somewhere here. I think that's where it might find a lot of selling. I mean, buying in the market. You know, it's a nice opportunity. If this moves, then it's just gonna do this.
It could actually be like a very nice long-term position to hold.
Yeah.
There could be I don't think it's going to be as aggressive as it was before because there was a significant amount of reasons why that would have happened and came down to like Russia mostly. But I don't think it's going to move as aggressive. But I do think there's still like significant more upside actually in the making.
Yeah, this is another one to keep an eye on. Bitcoin, have you been looking at that?
I don't.
Bitcoin is also setting up for something similar, you know, just that it's taking its time. And I think it's trying to get volume momentum because the way it's going down compared to how it went up, you can see that there isn't much momentum as yet. Maybe it might find momentum and eventually drop, but you know, we could then look at the chart and say it's preparing for a retest.
I don't know, man. Like I keep on wanting to like just short it more than anything.
Is it?
Yeah. And I don't know if like because we were naturally looking at like it coming to these levels to actually like short it back down lower.
Yeah.
And I can agree with you to some extent with how like that long is probably lining up more than anything else. But like these were the levels like we were looking at targeting from that bottom.
Yeah.
Just taking it up to there. And it's hard with Bitcoin because it also seems very low from where it was. Difference for me from gold to Bitcoin was that from natural gas to Bitcoin is that for me like Bitcoin has no intrinsic value, where natural gas does. So even though like Bitcoin is sitting at like $26,000, like it can also very much be zero and no one would. No, there's no demand for it. Like natural gas, there will always be demand for. There will always be demand for natural gas. Like people need to cook, people need to like heat themselves. If Bitcoin goes to zero, like no one economically is in a worse place than someone that just owns Bitcoin.
Yeah,
it's like an NFT, man.
You know, if it does go to zero, there might be some fundamental around that and effects of that. But I understand what you say when you say there will be reasons why net gas moves.
Yep.
Oil moves, those type of things. But Bitcoin, is there really a reason for Bitcoin not to push up from zero?
Purely supply and demand.
Purely supply.
That's the only thing. Like who buys it and who sells this puts a value to it. There's people like who was it like when we were at Ep16, someone actually said that Bitcoin's gonna go to like 1 million. And I just smiled at him and waved because there's no way like and he said this is gonna happen in the next couple of months. Except for if there is a certain collapse of the banking industry, because Bitcoin at the end of the day is still like an alternative asset,
Yeah.
and we can still see that be held as a store of value, even though there's still, and it comes down to the same sort of point of view. If you look at the dollar, the rand, Swiss franc, and you look at the pound as well, like there's economies backing it. There's bonds backing it. There's a lot backing it. Where Bitcoin, there's not much backing it except for people staking Bitcoin to say like, okay, like there's Bitcoin backing Bitcoin.
Yeah, but again, you know, you might find people that saying, hey, look, it's gone back to zero again. Something happened in 2018 or 19 where
Let's
just
buy the
shot
dip.
up. Let's buy the dip again. Creating other more millionaires, new generation of millionaires, because when it moved up that time, created a lot of millionaires. But let's see what will happen. Yeah, well, let's see. Bitcoin will also always be Bitcoin. There will always be theories around Bitcoin, views and all of that. Yeah, man. Any particular chart you are focusing on this week?
Yeah, I have a look at. We actually spoke about Nasdaq as well.
Nasdaq. Let's go to it.
Yeah, I want to have a look at. I want to have a look at Nasdaq because we spoke about that level on Friday as well.
Let's go. Let me open it. Nasdaq. We've been talking about Nasdaq on the previous episodes. It's just like gold, man. It's just respecting the analysis.
It just broke well. I was looking at that weekly time frame.
The weekly,
yeah, just where that closed on the weekly time frame. Closed really well. Like I still think there's more upside in this.
There is more upside. There definitely is more upside. This move to the upside, the way it looks, it's not complete. It's not complete. And I also mentioned when we were talking about this, not live, but I mentioned this supply here, that this move to the upside not complete, right? To me, it will be complete once it gets to this supply.
Yeah.
Right there.
Like I also said, I want those bottom weeks to be tested after it like gets to that zone.
Yeah, no, look, this thing is just going up. If you can just, retest something on the lower time frame.
Like I honestly think like we're gonna get a movement like this. So like those wicks over there, I think we're gonna get something like this. Pushes up or like pushes up there, and then we'll see like a pullback back to these levels, and that might very well be like the long-term trade on indices that you're also looking for.
Then it's gonna be gone.
Because it's not a monthly charge, right? So let's say this is months out. This is not going to happen anytime soon. Yeah. But if we're looking at this from a monthly perspective, probably we'll probably next month hit that level, that high.
Maybe 3 more months.
Yeah, that's probably 3 months out or so. But if you look at now, combining that with something that we looked at before, where I said I still think CPI is going to be the big one next month. CPI is going to be the big driver next month because I can still see that interest rates possibly getting underneath 4% for next month. What we might see is with the next FOMC meeting, after we hit those highs, they're going to announce a pause and we see the market crash down lower.
Yeah. And then crash, boom, pause. I mentioned this the last time that the markets are anticipating, this news in the FOMC, something different because it's just been a high. Once that pause or cut comes, then you'll see, man. We'll see. Yeah, but look, I'm also keeping an eye on Nasdaq for this push to the upside. It's not complete. Give it this month, the next month, just to complete this entire leg. Then we'll come back and see. Yep. I'll also be keeping an eye. US 30, not so much. But yeah, Nasdaq, it is definitely has confirmed what we wanted here. Yeah. Cool, man.
Why don't I quickly have a look at some NZD charts prior to interest rates?
I saw NZD USD.
Or like a Euro NZD as well.
Right there. Euro NZD, yeah?
Sure.
I think this.
Because you saw it break now, huh?
Let's see.
So I'm gonna zoom out. I can see if I get another one.
It's pretty push to the outer trend line. Long term.
Yeah. Yeah, I'm definitely thinking that this might get like. These are big levels right here.
Those are big levels, very big levels.
I'll actually start looking at longing it from it, to be honest.
Those levels there.
Yeah. Bit more push to the downside. Like these levels are something I'll keep in mind. It's been pushing up really, really well. Like I want to see like how deep these retracements are. It's like
So this one's
61.
random here.
Yeah, it's lining up pretty well, hey?
Yeah, yeah. Also giving that resistance is 1.8.
Mm.
The first one, this very first one was actually 17.6. This one here,
Sure, that's deep.
17.6.
Yeah, but I think it just formed the bottom there, to be honest.
So it's ranging in that 61.8, 17.6 there.
Mm.
Yeah, 100%. 100%. 100%. Yeah, no, we will definitely look out for this, keep a close eye for this. All right. And yeah, so Nasdaq, let's see what happens. Wednesday's interest rates, NZD, let's see what happens. And yeah, I think, yeah. Any final words?
Congrats to Man City.
Yeah, I mean, yeah, look, experience sometimes counts.
It's not just experience, man. It's squad depth.
Yeah, they are the monsters of the Premier League
Uh,
Nonsense.
congrats to Eric Haaland.
now. Eric Haaland for
Eric Haaland.
Erling.
Erling Haaland.
Yeah,
He actually, like, you know, he got 54 goals this year
this year.
in all competitions.
Yeah, in all competitions. Yeah, I mean, look, he said he wanted to score. He said he wanted to score a lot of goals. 54. Yeah, it's just a monster.
Yeah.
Just a monster.
Yeah, but, you know, like we're waiting for that 1 point over the next 2 games.
Then Champions League.
Yeah, Champions League.
Champions League. All right. Yeah, I think we're gonna end it here.
Final words. Arsenal.
You know, I didn't want to say anything because they work so hard only to be pep something. Eh?
Yeah.
Yeah. But look, interesting times. We will definitely see how it is. We'll definitely see how it is. All right. So, ladies and gentlemen, I think we're gonna end it here. It was a good one. Let's see how these charts move. And yeah, FOMC meeting minutes, the ZAR interest rates this week. Let's see what happens.
NZD.
NZD interest rates as well. Yeah.
Some nice stuff happening this week. So yeah, we'll catch up with you next week Monday.
Next week, Monday, of course.
You wanna punch your other stuff?
Yeah, you know, keep an eye on social media platforms, you know, for everything that happens, our offerings, you know, a lot of stuff we are working on in terms of the education, the trading part of things. But yeah, just keep a close eye on social media pages. Cool. Yeah.
Yep, let's wrap it up. Cheers, guys. Thanks for joining us today. And we'll chat to you guys next week Monday.
Cheers, guys.